Ladies and gentlemen, I want you to imagine if you're Elon Musk, or Jeff Bezos, or the Lizard, or I don't know, some random crypto bro. Congratulations, you're rich. But you now face a terrifying question. How do you not pay taxes? Welcome to the VIP section of the tax code where loopholes are legal, income tax is optional, and dying can actually save you money. With that being said, let's dive into the 4 strategies billionaires use to avoid taxes that a lot of people don't know about. Number 1. Capital gains. Okay, here's the first cheat code. Don't earn a salary, that's for peasants. Instead, get rich from assets, stocks, real estate, etc. Because investment income, also known as capital gains, are taxed less than regular income from a job in a lot of countries. How much less? Well, imagine if 2 people each make $600,000, one from a job and the other from investment income. According to 2025 IRS data, the worker pays up to 37% on federal income taxes, while the investor pays just 20% on long-term capital gains. This tax difference isn't an accident. It's designed to reward long-term investing, but it also shows just how much the system favors wealth built from assets over wages. Now, let's talk about the second strategy, buy, borrow, die, also known as never sell anything. Why? Because when you sell stocks, for example, you need to pay taxes. And while you would be taxed less than a job, there is something even better. Let's say you own 10 million in Tesla stocks. You don't sell it. That is silly because you would be taxed. Instead, you would just go to the bank and say, hey, can I have a loan of a few $1,000,000? The bank says, sure, because you can use a part of that 10 million Tesla stocks as collateral. So the bank would feel safe lending to you, which makes you get access to the loan money without being taxed. But how are you going to return the loan money? Well, you could either take out another loan using the same strategy or pay the loan back using your other earnings. So this is the buy, borrow, die strategy. Buy assets, borrow against them, then die. When a rich person dies, their assets go to their heirs tax-free thanks to something called a step up in basis, which sounds like a dance move, but it's actually how billionaires avoid paying taxes. Now, if you do feel like giving back, why don't try the third strategy? Starting a charitable foundation. You'll get a massive tax deduction. You donate stocks, avoid capital gains tax, and still get to control where the money goes. Some of these foundations are basically glorified piggy banks. For example, a billionaire could donate a mansion to charity and only open it to the public a few days a year. The IRS technically requires foundations to serve the public, but technically is doing a lot of heavy lifting here. Finally, we get to number 4. Offshore tax havens. Let's talk about it. Rich folks set up companies in places like Cayman Islands or Luxembourg, places with strong secrecy laws. Why? To make it so confusing that even the IRS can't tell where the money really is. Legally, Americans are still supposed to pay taxes on offshore income, but enforcement is weak, and unless you're dumb enough to name your company something like Definitely Not Tax Evasion LLC, you should probably be fine. Well, that concludes the 4 strategies. While you're living paycheck to paycheck just to afford rent, the wealthy are growing their fortunes through loopholes. And the wildest part? Most of these aren't illegal. You see, it's not tax evasion, it's tax avoidance. A sport that is played by a lot of rich people. What do you think? Do you think the system is fair or is it broken? Let me know in the comments. And if you enjoyed this video, please consider to like and subscribe, and thanks for watching.